Nexus is defined as, are you conducting business in that state? And there's different levels of Nexus. There's income tax Nexus, and then there's also sales tax Nexus. So it's possible that you're triggering Nexus for sales tax purposes, but not for income tax purposes, and vice versa. So it really just depends on the facts and circumstances, and each state's a little bit different in terms of the questions that they ask. We have one client that has employees in 8 different states, right? And they do trigger Nexus for income tax purposes, so we have to prepare 8 different state tax returns. And sometimes people do that by accident. They don't necessarily know. They're just thinking, okay, well, we're a virtual business. People can really work anywhere, for our company, let's say. And by having employees in different states, unbeknownst to them, now they're creating Nexus, and let's just say they have to register their corporation in these states, and then they have to file payroll tax returns associated with the different states and also an income tax return. So there's certainly more of a burden on the business owner as they do this. But for larger companies, it's less of an issue because they have resources to do this, and they typically have larger budgets, and maybe they even have a tax department that helps them manage all this. So the tricky part is when a small business starts venturing into this area, they're not really aware of it. They can create a whole host of problems for themselves. And I would say that a lot of small businesses, if they are doing this, they probably don't really even realize it, right? And so they might have potential exposure to those states by not fulfilling out an income tax return and not reporting, even though they are conducting business activity in that state. For some companies, the sales tax liability can be substantial and even put them out of business. So it's important to make sure that that's being handled correctly.